I'm one of the best traders out there.
Andrew O'Connell, CEO of Pristine Capital,
is a U.S. investing championship top performer.
There's a lot of people that say, hey, I'm the best trader in the world. Here's this one trade that I did that was really good. For me, I'm trying to go the route of actually building a real track record of performance. You're only a good trader if you can string together several good years of outperformance. I was coming off of the triple-digit year in 2023. At age 21, I had the goal, I want to be one of the best traders or investment managers in the world, and I started pursuing that goal. So I was basically just reading the Wall Street Journal every day and reading Bloomberg every day. I got to learn how these big mutual funds are actually trading big size in the market. For me, my best trades come from when I thought that using technical analysis and day trading would give me that consistent cash flow, and I found the opposite to be true.
What is it that you're looking for technically? So you got the fundamentals there that might be positive and showing signs of, okay, it could be a good opportunity. What is it that you're looking for?
Yeah, so that's a great question. One thing that I will say is the shorter your time frame is, the higher chance that your competition is a robot. You're not going to beat robots and algorithms. The odds they're not there in your favor. I'm still one of the best in the world at this. You have to have that delusional confidence that you can do it. One thing I would tell to anyone watching this is,
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you.
Welcome everyone back to the Words of Rizdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. This is day one of our US tour with verified profitable traders. And this is podcast number one as well. To start off right, we have the founder of Pristine Capital, who is also a top performer in the US investing championships. In 2023, he had a return of 103.5%. And in 2024, he topped that by over doubling it, actually 255% in total return. We are joined by the only Andrew O'Connell.
thanks so much for having me.
We got there. we got there in the end.
Yeah.
How are you, man?
Doing great.
That's great. That's great. And thank you for coming up to New York as well. I really appreciate you being here, and I'm very excited to get into this. So 255%, phenomenal return. What would you put that down to in terms of 2024? What were the catalysts to allow for such a return?
Yeah, in 2024, I was coming off of the triple-digit year in 2023. So I had a lot of momentum and I had a lot of confidence going into the trading year. And confidence is so important when you're trading. I think the main difference for me this year was I really just started cutting my losses very quickly. That was one of my goals coming into the year, and really just focused on not adding to losing trades. That was another thing I eliminated from my playbook. And then also the main thing that put me over the edge this year was I started actually adding to winning trades. So just making those little adjustments can really take you from a really good year to an excellent year.
Do you think a lot of trading results and performance really comes down to that? Those little adjustments, those little changes and tweaks that a lot of people overlook. A lot of people, I believe, are always looking at a big change, strategy, whole different market catalyst versus really defining the small little changes you can make, as you said, to really, that's a huge difference in return, 103% to 255. It's incredible.
Yeah, so I think when you're first starting and you're trying to find your strategy, really that's when you're kind of booming and busting, because you're trying to figure out what works. Maybe you're good at analyzing the market, but maybe your risk management isn't there yet. Maybe your risk management is pretty good, but you're over trading. There's these little hangups that are getting in your way. Once you've proven to yourself, hey, I can excel and my strategy works and I can use it to beat the market, and you start to get down, the risk management's in place, your routines are in place, and all those are firing, that's where you can get to where it's just the little optimizations and also looking back at your past trades. So you can start to look at, hey, I did pretty well, but there's a few mistakes that I made, and you can start polishing those. So really in the beginning of your journey, it's about, let me just find something that works. Let me try to be profitable. Let me try to get out of this boom and bust. Once you're beyond that and you're really starting to trade at that professional level, that's where it comes down to optimization, getting faster, hitting your best setups with more size. And that's where you can hit really that that next level, but it takes time to get there.
What is it about the US investing championships? Like, why actually get into sort of a competition, if you will? Like, what was the mindset behind that?
Yeah, so my mindset really was I want to prove to myself and really just to the world that I'm one of the best traders out there. So for me, and especially too, you see on social media, there's a lot of people that are really into trading. And there's a lot of people that say, hey, I'm the best trader in the world. Here's this one trade that I did that was really good. For me, I'm trying to go the route of actually building a real track record of performance. And I think you're only a good trader if you can string together several good years of outperformance. So for me, it's very important while I'm still young. Hey, I want to start putting together that track record. And I don't want to do it in the shadows either. I don't want to just be on my own account. I actually want it to be verified where people can actually see my results every single month. And I also run a subscription service as well. So I want to be transparent as possible and really just show people here's what I'm actually trading. Here's my verified results. And, you can trust what I'm doing essentially.
Yeah, versus just talking about trading, but not actually showing and showcasing the results, especially over long term as well. So not just say a good month or a good quarter, but literally year on year.
Exactly.
And progress as well, which is amazing, of course. But talk to us about the start of the journey. As you mentioned, like when you begin, there's the boom and bust. But why did you even choose to trade in the first place?
Yeah, so for me, I grew up in Long Island, New York. My dad was an accountant, and my mom was a stay-at-home mom, originally from Puerto Rico. And I was always trying to master something. So when I first was growing up, I really wanted to play pro basketball. So I devoted all my energy to that. I was gung-ho on it. I maybe made it to age like 14, junior varsity, and I hit my ceiling in basketball. From there, I ended up transitioning into tennis. I had a gym teacher that got me into tennis, and I took those learnings from basketball and I applied it to this new craft. And in tennis, I was able to make all county. I was nationally ranked in high school.
Wow.
And I was able to get a scholarship to play Division I tennis. And same thing happened to me. I majored in economics, but economics was kind of in the background. And eventually at the Division I level, I hit my ceiling in tennis as well. So I was very lucky. In college, I took a financial markets course. And I started learning this stuff, pretty passively. And it really just clicked in my head. Hey, if you're in the world of investment management and you put together a portfolio that has the best return, that makes you the best portfolio manager. So I immediately just went gung-ho on investing. I completely dropped tennis and I transferred that energy and what I had learned from tennis into trading. So at age 21, I had the goal, I want to be one of the best traders or investment managers in the world. And I started pursuing that goal. The only thing was at that age, I had no idea where to start. So I was basically just reading the Wall Street Journal every day and reading Bloomberg every day. I ended up linking up with one of my old tennis teammates that he had graduated a couple of years before me. And I told him, hey, my goal is I want to be a trader. I want to be a PM. And he pretty much told me, he was like, Andy, you've got no shot at getting any of those roles. You're coming from a non-target school. The deck is stacked against you. But he did tell me, hey, some of the people I'm around, he was working at Vanguard, where I eventually started to work as well. He said, if you start pursuing the CFA designation, you can learn fundamental analysis, and that might put you ahead of the curve. So I jumped in head first. I started studying the CFA exams. I was learning fundamental analysis. I was just reading as much news as I could every single day. And I was just kind of learning how the market worked in my own unique way. I had no real path. I was just learning on the fly. So I ended up getting a job at the Vanguard Group, and I was working on their brokerage department. So I was executing orders for clients. So I was learning the mechanics of the market a little bit. I was helping them set up their retirement accounts. I learned the Vanguard long-term investing methodology, and I was teaching that to their clients as well. But I wanted to get onto the trading desk. I was always so passionate about trading. I wanted to get there. And I ended up working my way onto their fixed income trading desk. And so I had my own Bloomberg terminal. I had 4 monitors in front of me. And it was awesome. I got to learn how these big mutual funds are actually trading big size in the market. And I got to learn the bond market as well. So yeah, it was a really nice learning journey. I ended up getting into their investment management development program. And at the time, I was doing trade confirmation, trade settlement, managing the full trade life cycle. I was doing VBA programming. I was doing credit research. I was trying to help everyone on the trading desk any way that I can, just to sponge up knowledge. And I got into that development program. And the program was a bunch of Ivy League kids coming out of school and then one internal hire. Out of the thousands of people, I was able to get it, which was awesome. But the unfortunate thing where things kind of took a turn was I got kicked out of the program before the program even started.
What happened? What did you do?
So I was trading on my own account. I was learning. I was building out my strategy. I was doing fundamentals. I was trading themes in the market. And I was doing swing trading and position trading. Like at that time, I was maybe doing 20 to 25 trades a year.
Okay.
But I was doing very well with those trades and getting nice returns. But the problem was I was racking up compliance violations while I was there.
Okay.
Because pretty much with Vanguard, they trade almost every security in the market. So you can't really trade your own personal account.
Okay.
I ended up racking up too many violations. I got kicked out of the program and I pretty much hit my ceiling there. There was no more future for me there, no more becoming a portfolio manager, trader, that sort of thing. So that's where I went out onto my own and I started full-time trading. So from that point, that's where I was fully in it.
Interesting. Just to go back a little bit, starting with basketball, moving on to tennis, but trying to do it at a more professional level and going up the ranks as you did. One thing that I've found with trading, which is so interesting, is that trading is almost as close to, an athletic sport, professional sports, even though it wouldn't seem like it, right? So professional sports, very active, very, very much athletic, while trading is complete opposite, not very active, not athletic, but in terms of the work ethic, in terms of the performance, focus on how you perform and how you can increase your performance is almost identical. It's almost the exact same. So how helpful was it, do you think, or was it even something on your mind that you realized was a correlation at the time? Or is it something that you maybe reflect on in terms of the benefits of you going through that in your journey, going through basketball, going through tennis, and then obviously coming to trading?
Yeah, so I knew that there was going to be direct parallels because I believe mastery in anything, it's pretty much the same. The principles that you have to apply.
Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029 when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below, and let's get back to the episode.
And I knew the amount of grind it takes to get good at something. And I knew how many people, like when I played basketball, how many people want to be a good basketball player? When I played tennis, how many people around the world want to be a pro tour tennis player? it's very competitive. So you have to use your time wisely and you have to train the proper way. You have to put in the effort. And then there's also a huge mental side as well, where even if you put in all of that effort, if you don't have your mental composure down, that can be the difference between a win and a loss. And so that for me, having those experiences and also hitting ceilings in those prior endeavors, I was starting off in a good place for trading because I was never of the mindset where like, oh, I can get rich quick trading or it's going to be so easy. Those kinds of things, I never fell for those because I knew how hard it was to master anything really. So it really helped.
There's actually a quote from you here that kind of aligns with what you're saying. You said, if you spend 1,000 hours trying to learn, maybe only 50 of those hours will contain true gems, but you still have to put in that 1,000, which I think is really, really important to highlight. So as you mentioned there, you might put in all that work and still get a loss. Whether it's a case where maybe the opponent was better on the day, maybe there's something to do with the conditions on the day, maybe it was the mental composure, as you say, but you still had to put in all that work. And even though you took that loss, you still did everything correctly up until that point, but you still have to overcome that mental barrier or the feeling that you get from taking that loss, because the next game you need to start fresh, right? Because otherwise, if you bring that energy in, it could impact your next performance, and then that can lead to essentially a spiral, which is the exact same in the markets, the exact same parallel. So, going into then trading, which was interesting. One thing you mentioned actually, which I wanted to touch on, is that you did economics and then you had done like a trading or investing course. So what was it about that? Was it really on your mind that maybe eventually you'll do that? Was it just something of interest at the time? Like, because at the time you weren't trading then, right? But you were taking these courses that would lead that route. So was it something that you kind of just had an interest in generally?
Yeah, so I think it's kind of in my blood because my dad was an accountant.
Mhm.
He was a CPA. So he was very numbers oriented and very just organized, detailed throughout my whole life. And so I think when I got to high school, I always hated school. All the stuff that I was learning, I was always pretty good. My parents, forced me to have a certain bar that I had to hit. So I was always a pretty good student, but I really hated it. Like I was like, why am I learning this stuff? None of it is really applicable. And then in high school, my senior year, I took an economics class. And so I was learning that stuff. I was like, this actually makes sense to me. I want to pursue tennis. That's where my whole focus is. But economics and learning how money works and how it flows through the world, hey, I think I'll learn that. It's actually pretty stimulating. So in the beginning, it was kind of just this thing in the background. I was learning economics, but more focused on other things.
Mhm.
And then when I got to my junior, senior year, that's really when it hit the forefront and I went all in on it.
I love that. Then transitioning over to Vanguard, one thing that I found interesting when looking at traditional prop firms as well is the element, and you mentioned it yourself in terms of you were trying to provide as much value as well and soak up as much knowledge, to the different departments, which then led you to actually getting onto that role that you then got kicked out of, but that led to that moment.
Yeah.
How important is that, though, to be able to provide value, even if you're not in the position of, say, being this uber incredible trader or anything, but yet you're in the environment, you're soaking in knowledge, you're providing as much value to those around you in order to then soak up more knowledge as well. So essentially, you're not just asking, you're not just there saying, hey, can you tell me about this? Can you teach me about this? Versus here's actually an idea or here's something I have to give you. And then they end up being more open to providing more value to you as well. How important was that to your journey, do you think? How helpful and impactful was that to your journey to be in such an environment that, as you know, most retail traders out here are just alone, by themselves, and at most are in, say, some sort of community, versus in person, being in this environment around, as you said, people trading such large size and seeing such large orders going through the markets?
Yeah, it's incredibly crucial. So for me on that trading desk, I knew I had a goal and I knew I wanted to learn, but it was all about just providing value for people. So those people that are in those more senior positions, they would love to be doing all this analysis. They would love to be in the Excel sheets. They would love to be writing the script, all this kind of stuff, but they just don't have time because they have so many obligations on their plate. So what I found was working on a big institutional trading desk, there's so much work to do and there's never enough people to actually do it. So if you're someone that is willing to, hey, I got all my work done. Hey, does anyone need help with anything else? I'm here. I can shadow you. I can do whatever. I'll learn it. I'll help you. If you can do that, that's how I got a lot of opportunities. So I ended up learning a lot of VBA programming because there were things that needed to be automated on the trading desk. And now as a retail trader, I do a lot of programming and automation on my end. So that ended up helping me. Same thing with credit research. My team, I was doing portfolio analysis. I was never supposed to be doing credit research, but it was really just there was a need there.
What would that entail, credit research? Like, what would that mean, and what information would that be giving you?
Yeah, so I was assigned a sector. I was doing residential REITs, so these big real estate companies, and I was doing fundamental analysis on those different REITs. And
Would that be real estate investment trusts? So
correct.
like large portfolios of investment real estate. Sorry.
Exactly. Yeah. So that was my sector to cover. And I was looking at the fundamentals of those companies and then doing relative valuation. So I was comparing them against each other to see their strengths and weaknesses. And then beyond that, once you look at the fundamentals and you compare them against each other, then you're looking at where their bonds are trading. And you might see a scenario where the fundamentals on one company are better, but the bonds are trading for cheaper. So there might be an opportunity there where, hey, maybe there's a relative value opportunity. So it wasn't the same as analyzing a company for an equity investment. You're looking at it from the credit side. Can they meet these obligations? Can they pay back the bondholders? But you get a really good fundamental understanding of just how to look at companies. So it was really just looking at things from a different angle.
What was the difference for you going from, being a retail trader who had learned some things in college, done some courses, had a general understanding of markets, but then going into a role like that where it's getting so much more in detail, as you mentioned this, so like going into a more detailed and niche sector, doing fundamental analysis on those companies, doing these comparisons, what was the key differences there, like, and that sort of that bridge, if you will, between the two? Like, how much of a level up would you say that would be?
Yeah, so that's a great question. One thing that I will say is what's good is if you're at a big institutional shop, there's frameworks in place. And you can see how all these systems are coming together, how things are being traded, that sort of thing. But the other thing that I think is very encouraging for the retail trader and investor is that these people are treating everything as a 9 to 5 job. So for them, it's like, hey, my coverage universe is this. I have to listen to these earnings calls. I have to do this. These are my obligations. And there's going to be some people that are very passionate and they're going all in. And there's going to be other people that look at it as a 9 to 5 job. So what I always found was me having that passion and really wanting to dig in and wanting to learn, it was always an advantage. And it's an advantage for anyone in financial markets. Like, if you don't have the passion, you're not going to want to listen to an earnings call. You're not going to want to dig into the numbers. You're not going to want to look through 100 charts a night. Like, it's just not going to happen. So for me, it was a confidence boost that, hey, I was able to get to this stage and I can see that while there's a lot of good stuff going on here, there's no one here that's really any different than you and I or anyone that's retail trading at home. So it was more of a confidence boost.
Fair enough. And what did that boom and bust cycle look like for you early on? Well, how did that present itself?
Yeah, so the boom and bust cycle, when I first went full time, it was kind of abrupt because that opportunity fell through for me. I was looking at my personal trading and I was like, hey, I'm doing very well in my trading. I have confidence in myself. So I'm going to go full time. But beyond that, I didn't have too much of a plan in place. I didn't have, a big vision. It was pretty much, I'm good at trading and I'm going to figure it out. I joined a proprietary trading firm shortly after I went full time because in my mind, I was like, hey, I want to have some structure. I want to keep learning. And this is going to be different. Now I'm going to have to replace my income stream from working full time. So let me take this approach. So really what I did, I had in my mind this mindset of cash flow trading. And I had this mindset of consistent profitability. And at the time, I did not know what that was. Like, I thought consistent profitability was I make money every week. I make money every 2 weeks. I make money every month. And now I've come to understand that trading P&L really comes in bunches. So when I went full time, I kind of tossed aside the stuff that was working for me. I was doing really well with fundamentals. I was doing really well with reading the news, doing really well with events, catalysts, themes, and I went to full on technical trading. Prior to this, I had never used charts in my trading, and I was doing very well without even using charts.
Why do you feel like you made that choice then?
I think at the time I thought that using technical analysis and day trading and trading every day would give me that consistent cash flow.
Okay.
In my mind, I was like, hey, if I'm doing 20 to 25 trades a year, I'm doing one trade, then the next trade is coming 3 weeks later, the next one is coming a month later. There's no way to be consistent. But if I trade every day, then I can be consistent. And I found the opposite to be true. So the training program in the prop shop was great in that I created a trading plan. I created, some setups that I used, but it really was just the wrong strategy for me. So I went through that. I took a drawdown pretty early on when I was going full time. And when you're full time and you take a drawdown, it just feels like the sky is falling. You can very quickly lose your composure.
Yes.
So that's what happened to me, where I lost my composure, my confidence declined. I was trading a new strategy that I wasn't really used to. And I went down this spiral where it was kind of revenge trading, trying to get back, trying to meet these obligations I had every month. I had a mortgage to pay. I had my now fiance, trying to go on dates, all that stuff. And it became.
Would you say that's probably one of the worst positions to be in, when you have obligations and you're in a drawdown, and then that combination is such a hard thing to overcome.
It is, where it feels like, man, I'm adding no value to society. Like if you're red on the day, it feels like, man, I was just a net negative today. So it was very challenging, and I went through this spiral that took me a couple of years. There were periods in there where I would have a nice bounce and things would be on the up and up, but it always came down to trying to get back to this prior mark. And yeah, it was pretty much a spiral for a couple of years there.
In that prop environment, though, did you have resources available to you? Did you have advice, things like this?
Yeah, so in that proprietary environment, I think there's lots of different kinds of proprietary shops.
There is, yeah.
Yeah, so I had a risk manager that was helping me. But yeah, the pressure still gets to you. So when things are going poorly, your size gets cut. You have conversations with your risk manager, those kinds of things happen. And eventually it just got to a point where basically my proprietary trading account, I blew out of it. A lot of my resources were depleted. And I had this rock bottom moment where I came to this realization that I need to recapitalize, and also I need to reconfigure my strategy. So I ended up going back to working. So I ended up getting a job waiting tables for some time, which actually really helped me with my trading. And I ended up kind of just starting my strategy from scratch. So
how did that help you with your trading? Was it the having income coming in?
Yeah. So having that income really just started the process of working your way back. And what I did was, working. And then I just thought to myself, those first couple of years when I was doing so well in trading, what was I doing? Because my journey was a little bit different. Most of the traders that I talked to, they say in the beginning, I was horrible. I had no idea what I was doing. For me, it was the opposite, where the first couple of years, everything was great. So I kind of realized I need to go back to swing trading. I need to go back to position trading. And hey, I was doing really good with fundamentals, and I was doing really good with news and themes. So really what I did was I recreated my strategy. I took that trading plan that I created from proprietary trading. I took the old stuff that I was doing, all these different methodologies, like even looking at the macro picture. And then I layered in the technical analysis and the options trading that I learned from the proprietary trading world. And I put my strategy back together, started working full time. I was sitting there watching a video. I saw like an advertisement. It was for Y charts. And I went onto their website, originally thinking I was going to be a user of their software. I ended up seeing on their careers section, they had an opening for an Excel modeler and someone to help their customers use the software. So I ended up getting that job. I had pursued the US Investing Championship a couple times in the past. First 2 times I tried it, I didn't get on the leaderboard. So this new time I tried in 2023, I was working full time. I was saving money again. I was learning a lot of good data science stuff, working at Y charts, doing some good modeling there and using their data terminal. It was awesome. and I was building up my track record again with a new strategy. So from there, things started really turning around for me.
Incredible. And how did you overcome the mental barriers that would have been in place from blowing out the prop shop account and going through that drawdown and that period? Because that's where I find a lot of traders find themselves and they don't recover, or they spend a long time trying to recover. And probably a lot of traders out there are going through that right now. Like, what was it that allowed you to overcome those mental barriers of always trying to overcome and get back to where you were and to perform better? Because what normally would happen is, let's say you made those changes and then you saw some good performance, but then you revert back because you're like, now I've made it, and you get overconfident and you just end up in that same cycle. So what was it that allowed you to overcome those barriers?
Yeah, so it was very different, where up until then, my whole life, it had been I put effort into something and I get some good results, from that effort. So this was totally new, and I was in a totally new headspace. Psychologically, I was a different person. And really what it came down to was just building small wins. So I think getting some money flowing into my accounts again and not having that pressure really, really helped. And then I think from there, getting wins on the trading side. So going back to my old strategy, I found, hey, I can do the exact same stuff I used to do. And now with these new skills that I have, I'm a much better trader than I was in those days. So it's kind of building the strategy, recapitalizing, and then just honestly getting a good year under the belt. That's really, really what helped. A lot of these processes, like the routines, I've been doing this for so long that those were in place. It was really just building up some momentum and getting a good year on the board that it just turned things around for me.
Is it almost a case where you've proven to yourself that you can do this and you can actually perform very, very well? So it allows you to sort of build your confidence, but in a positive way, not in like an overconfidence way, but you're building it based off results, based off evidence of that. If I do these steps, I get these results, and therefore I can continue to grow. And then, as you've seen, it compounds to obviously this year, where you've actually doubled the results of the previous year.
Yeah.
And even if I'm not mistaken, at one point during this year, you actually had tripled the results of the previous year.
Exactly.
Which is phenomenal, and that's an interesting thing with trading, that how that compound of your efforts, how important is that? Because I do truly believe there's a lot of traders who are hardworking for sure, but there are many traders who convince themselves that they're hardworking, when in reality they're really not putting in the actual work for progress. What they might be doing is just watching a YouTube video, a webinars. Mainly, a lot of people are looking for things like forecasts, like other people's opinions of the market, so they can just replicate and copy or just validate what they're thinking. How important is the actual work, and what work is that? What would you class as the actual work you need to do in order to make those progress?
Yeah. So most people, they get to that point where they have their first big drawdown, their first blow up, and that's where the journey ends. They just quit and, it's all done. But I think what people don't realize is you learn so much from those experiences that it's really just the bounce back factor. If you don't really have the resilience, that is the most important thing in trading, where you have to, even if you get a really bad result, you have to still in the back of your mind, even when your confidence is low, still think, but I'm still one of the best in the world at this. You have to have that almost delusional confidence that you can do it. In terms of actually doing that work, it's really taking a look when those bad experiences happen and just looking at what are the commonalities. What am I doing when I'm trading very well? What am I doing when I'm not trading well? And you have to look at your own trades, which is the work no one wants to do. For most people, watching a webinar, it's like, yeah, it feels like I'm working on my trading, which you are. You're watching webinars, watching content that's good, but you have to pair that with your own action. So you got to look at your trades and see what's going on. Trust me, if you're watching this, if you look at your trades, you're going to learn a ton. So for me, it was every time I blew up, it was always, I had high conviction on a trade. The trade wouldn't work. I would double down on it. I would triple down. And then boom, you're in a bad state. You take a big drawdown or you blow up, that sort of thing. So it really came down to, hey, if I stop adding to my losing trades, it's going to be impossible for me to blow up. So that was just that simple realization, turning the corner, where it's, hey, if I cut my losers faster, that will help me. And with most traders, they're really concerned about being right, where it's like, I had this prediction on the market, I got to be right on the prediction, or I got to show everyone my market view was correct. And it's really not that. It's when you're wrong, can you cut those mistakes quickly? And then once you're good at that, then you can focus on, okay, on my good trades, what's happening really well? How do I add more size to those? And that's kind of what I'm working on more so now, like the optimization. But in the beginning, you have to put in the work. I see a lot of traders that, they want to adopt these very simple methods that maybe work if you're very disciplined. But to be honest, I find you have to have market awareness. You have to read a little bit when you're trading, even if you're a technical trader. If you're a fundamental trader, you have to know some technicals as well. That can be a detriment as well if you're only fundamentals. So what I found is you have to know a little something about all these disciplines, and you have to look at your results, and you gotta, just go through your
Would you
results.
say that would be then phase one would essentially be like focusing on what you're doing incorrectly, the mistakes you're making most of all, correct those and optimize those before moving on to obviously what you're doing correctly and what you're doing really well to then optimize beyond that. Because otherwise, if you focus on only what you're doing well, those mistakes will always be there. So you're always just going to be ending up backwards, right? Always going to end up blowing up in the end or something like that. Versus, as you said, like once you focused on, okay, every time I blow up, this is the mistake I'm making. I'm reviewing this. How can I optimize that? How can I change that? And one thing you mentioned in terms of like learning to cut your trades, your losses early. What factors go into that? What factors allow you to, or what factors did you look at to help you to determine and take action on that?
Yeah, so I think tracking how long you're in each trade. So I have an Excel log, and I put all my positions on the log, my entries, I put my stop out price, and it always has to be defined ahead of time. So you want to document your trade, define your stop right away, and then also document how long you're in your trades. So if I'm looking at my trade log, and I share this with all my subscribers, so my information is out there, there's other people looking at this and holding me accountable. If I look at the trade log and all my positions are red.
Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode.
And I've been in all of these for over a month. That's a problem. I want to be seeing trades that are green. And if I'm in a green trade, and wow, I've been in this trade for 3 months, that's a really good situation. So documenting things, whether it's a little Excel sheet, whether it's a Word document, whether you're using a trade journaling software, that can be even better. You have to have that accountability. And that's really the only way you can get out of those behaviors.
Do you feel like when you're looking at those losing trades, then being able to obviously collect the data, right? So journaling the trades, having that data there, then obviously reviewing it, and then from reviewing it, you're noticing a pattern that if trades are over X period of time, so maybe if they're in the red over 7 days, they're likely to just be a loss. Is that essentially the thought process that allows you to cut them earlier?
Exactly. So you start to get to a point where it almost feels good to cut your losers, because when you cut your losers, that's really what builds your confidence in a major way. Because when you start cutting these things quickly, your confidence in your longevity grows. And the more you feel like, hey, my chances of blowing up are zero, close to zero, whatever that might be, then you start to think about, where can I be in 3 years' time? Where can I be in 5 years' time? Where can I be in 10 years' time? And then you stop thinking about, like, oh, I need to win this trading day, or I need to win this trading month. Those kinds of behaviors, if you're optimizing for really short-term results, you will end up sacrificing your long-term results. So it all stems from getting those good behaviors in place, and your psychology and your mindset, you really just start to grow exponentially as a trader.
Do you feel that short-term thinking is a problem for traders as well? So when you were going through that period of the boom and bust and blowing out, and what was your mindset like then? Were you thinking long-term, or were you thinking more short-term at that time?
At that time, it was definitely, I was in a survival mode where I was like, I got to win this trade. I got to win this month. I've got these bills coming due, in 2 weeks. So I got to pay those. And your mind, especially as you enter a drawdown, you can actually lose the ability to think long term. Like when I was in those deep states, it almost feels like you're impaired in some way. So it's very important, when you're in those situations, you have to just cut things. Sometimes it takes restarting. Sometimes, like me, it took recapitalizing. It took me going back to work. A lot of those things, and that's how you can turn things around. But yeah, if you're thinking, like, if you're on social media, it can be so bad. So before I went full time, I had never been on social media before. So it was very easy to think long term. But when you go on social media and you see, every day there's a stock that goes up 100%. It just happens. There's always a stock on the move. You go online, everyone was long that stock that went up 100%. And, everyone was short the stock that declined really big. And you start to think in your mind, like, man, everyone else is doing so good and I'm not doing so good. And that can also rush you.
It's very, very true. It's a very, very fair assessment. And it's interesting you say that, because especially over the last couple of months, we've seen such volatility in loads of different markets and loads of different tickers, and it seems like everyone's winning. Yes, it does seem like everyone's caught every single move possible, and it's interesting because that's kind of, it might not even be their fault necessarily. For example, the people who are posting, it's more our mindsets where we see it and go, oh, everyone's winning. Why am I not winning? And you start comparing and you start second guessing yourself and what you're doing, even if you're doing something right. It's very naturally done. But, making that transition, though, as you said, you started thinking more 3 years from now, 5 years from now. What did that do from your mindset? Start thinking more long term. How did that impact your trading on a day-to-day basis?
Yeah, so it took away the sense of urgency. Like for me with my style, I might place a trade today, and then it might be a week before I place another trade, especially if the market conditions aren't aligned properly with what I'm doing. So in the past, it was like, man, I need to be trading every day. So I would be going in and out, so many executions. Once you have that confidence that, hey, I can string together a good performance here if I follow my rules, then suddenly it's not like life or death every day on the desk. So there's a lot of days now where I do my morning work in pre-market. I usually am on the desk the first 30 minutes of the session, monitoring and doing my executions. And then there might be a period from 11 a.m. to 2 p.m. where I jump off the desk and I go do other things, focus on other things. Maybe I go to the gym. I've got a puppy. Maybe I play with him, bring him for his walk. Little things like that. And I'm not so consumed by the market. When you're in that really short-term mind state, you'll be eating dinner with your spouse and your spouse is talking to you and you're thinking about the market. And that's one of the toughest things.
So it's not a healthy environment to put yourself into or to create, especially in the home, but just generally speaking as well. But also in terms of the fundamental analysis, like what does that look? Is obviously you're using that now, using combination now, right? But what does that look like? Like, what is that process for you? What resources are you using, to facilitate that as well?
Yeah, so I'm primarily looking at sales growth, margins, and earnings. And really, what I'm trying to determine with the fundamentals is which direction is the company headed in? Is it headed in a positive direction, a negative direction, or are there really no fundamentals behind this and it's just hype?
Hmm.
And sometimes you can get amazing moves in stocks that have no fundamentals. That's a thing as well. But for me, my best trades come from when the chart is looking good and the stock is in an uptrend or curling out of a downtrend, and I see that there's buyers there. And then I also look at the fundamentals and I see that it's a strong company. And then I also have some sort of understanding of the story behind the company and why people like it so much.
Mm.
When those factors align for me, that's where I can take really big size in a trade. And that's where I can sit in the trade for months at a time, maybe a year at a time. That's where if the stock dips 3% on one day, I'm not freaking out, cutting the trade early, cutting my winner, because I know, hey, this is a pretty good company. It's headed in the right direction. Market's looking good. I know the story. And for me personally, it just gives me confidence to do that trade. In terms of these metrics that I'm curating, you can get these metrics, TradingView has them, FinViz has them. I do a lot of Excel modeling, so I'll put the metrics in Excel. Sometimes I'll compare the companies. And at this point, I try to have things very automated. I don't want to be like going to the company's 10K or doing any of that manual work. I try to have the metrics that I like just curated for me.
How do you do that process?
Yeah, so I actually have TradingView indicators where you can use PineScript and you can do some coding in there. So I have it where on the chart, I can actually see the fundamentals that matter the most to me. So I have that in TradingView. And then, I used to work at Y charts. I did a lot of data science work while I was working there. I ended up, over the past couple months, no longer working at Y charts, but I'm still a user of their software. So I'm able to use that to curate a lot of the fundamental data as well. So yeah, you have to be willing to really leverage technology and just try to figure out what matters to me. And then once you figure that out, how can I get it very quickly coming to me?
It's so fascinating. I think fundamental analysis is something that a lot of traders, I come from the FX space, so more like the Forex space. And in the Forex space, there's a huge amount of traders who literally only look at technicals and don't look at fundamentals whatsoever, which is fascinating because a lot of the time, the fundamentals are the drivers for the larger moves, of course, and the volatility and the long-term direction. And I do get it. Like, obviously, a lot of traders scalp, of course, as well. But I think overall, having the macro, the bigger picture analysis and sort of movements that are really just backed off fundamentals is very important. And I'm saying this as someone who was literally just a technical trader for when I was trading. When I was actively trading, I was just technical. But thanks to the podcast, I get to sit with people like yourself and other fundamental traders and some who are purely fundamental. And I get the understanding. Like, I remember there was one particular trader very early on, actually, in the podcast, sort of journey. I said to him, like, why fundamentals? And he said, because I want to know how the money moves around the world, right? Or how the world operates. And it was so true when he said that with just one sentence, because it's essentially it is truth. Like, yes, there's the technical element, right, which is indicating the buyers and sellers and so on, and there's technical patterns and so on. But in reality, why things move, and why these things are happening, how the world operates is based off fundamentals, right? The fear and greed, the trade wars, or whatever it may be. There's always fundamentals behind the move. Even if you're able to dissect it and trade it purely off technicals, there's always a fundamental thing behind the volatility, behind those opportunities. And regardless of whether you use it or not, having that understanding is a beneficial thing. Especially, I would say, even as a non-trader, having understanding of fundamentals is so beneficial because it takes away the panic that the news will bring, right? And the mainstream media will bring, or social media in particular will bring when you're reading an article saying that, oh my goodness, the markets are overexposed and some mega crash of all crashes will come and it will completely change society. Having fundamental knowledge will help you to sort of just calm down a little bit and I actually understand what's happening, Yes, we're overbought, whatever it may be. Sorry, I went on a little bit of a rant there, but talking of fundamentals though, I have here that in 2023, regional banking crisis, you traded Western Alliance Bank during the crisis, identifying a key news event indicating deposit inflows. So that's one example of how fundamentals, and then as well, Bitcoin and BlackRock's partnership.
Yes.
You capitalized on BlackRock's partnership with Coinbase, trading Bitcoin and related stocks with MicroStrategy, which is a whole new thing now as well, MicroStrategy.
Yeah.
It's a very interesting thing there. What are your thoughts with that, actually? I know it's something a bit more newer. They've obviously been entered into, if I'm not mistaken, the NASDAQ equity.
They have.
But they're so highly correlated with Bitcoin's price. So when Bitcoin was at all-time highs, MicroStrategy had grown massively. But then when we had that just small correction on Bitcoin, the price of MicroStrategy, if I'm not mistaken, has probably been 30% down, 40% down, around there. Like, what are your thoughts when you see something like that? That's sort of when it's so correlated now to Bitcoin based on all the Bitcoin that they're buying up.
Yeah, so MicroStrategy, I traded in 2023, and that was a pretty decent P&L driver for me. Then I also traded it again in 2024. So I'm very familiar with that stock. And to me, I've always been a believer in Bitcoin. My older brother, he actually got me into Bitcoin. I was a total non-believer, and he's the one that really got me to take a deeper look. So for me, it was kind of like, okay, in the macro picture, I understand that Bitcoin should do well because these central banks keep printing money. That's, to me, the whole thesis behind Bitcoin. They print more money. There's more money in circulation. Bitcoin's finite. So therefore, I think when they're printing money, when they're easing, it should go up over time. MicroStrategy is really like a levered version of Bitcoin, where they're just taking on debt, they're buying even more Bitcoin, that sort of thing. So for me, I was actually using MicroStrategy as sort of like a Bitcoin proxy. And hey, if I thought the chart on Bitcoin was going to go up, if it was in a good technical pattern, I'm getting long MicroStrategy and I'm using it to trade that. Then it got to a point, I would say maybe in the last 2 months or so, where everyone's talking about MicroStrategy. The thing went up like 500%, something crazy. Now it's getting added to the NASDAQ. Now they're taking on even more debt. Now Bitcoin's at 100K and they're buying up at this level. Now I feel less comfortable. So I'm not long MicroStrategy at the moment. To me, I think MicroStrategy will be a better buy if Bitcoin, let's say, falls from 100K to 80K. Then when everyone is saying, oh man, MicroStrategy, it was always a dud. Like, why did we add it to the NASDAQ? That's where I'll be looking for an entry. And potentially if it forms a base, starts to make the move again, that's where I'll be looking.
And knowing then, they'll probably buy at 80K again as well.
Yeah.
Which will help them to push it back up, no doubt, as well.
Yeah.
It's a fascinating one with that, because it's like I know some people are trying to raise alarm of the fact that they're, as you said, going up debt, buying more Bitcoin, the stock increases. They then obviously do the same sort of cycle. And then the issue being, though, that if Bitcoin has a large correction, it could cause a lot of problems for them.
Yeah.
But it's obviously working right now. But these are the nature of the markets. There's so many different ways. And one thing I wanted to ask you, actually, in terms of your trading, is it are you using leverage at all, or is it more just spot sort of investing long term?
Yeah, so I don't trade on margin. I've just never liked the idea of it. But I do trade options. So I use options to get leverage. So typically what I'm doing, like for the contest, if I'm trading, let's say, a smaller cap stock, for that I'll use common shares. But say if I'm trading something like, I traded a lot of Alibaba last year or Google. If there's something that has a much higher price, and let's say it has lower volatility, a lot of traders, they'll go, I'm not going to trade mega cap stocks because they just don't move as fast. So for those, what I'll do is that's where I'll use options. And typically what I'm doing, I'm never going for like weekly options or zero DTE or anything like that. For something like Alibaba, what I was doing last year, I was buying leaps. So like contracts that expire maybe in like 6 months to a year.
Okay.
And I buy them in the money. So it's really what that does is when you're right on the trade, your payout isn't as explosive. But if you're wrong on the trade, also your
losses aren't.
Yeah, your losses aren't as explosive either. So I like doing that, where if it's a slower moving stock, hey, maybe I'll go for the options there. But for anything smaller, I'm not really using options.
Because the volatility is already there for you.
Yeah, it already behaves like an option.
Yeah. But in terms of that then, so how many different markets are you looking at? How many different tickers are you looking at? How do you go through your ticker selection?
Yeah, so I do a lot of screening and curating the market. So I start with a top-down view where I'm looking at what's going on in Europe, what's going on in United States, what's going on in China, Japan, all those big macro players. And then from there, I'm drilling down into the sectors and the style factors. And really what I'm doing is I'm trying to find either momentum or a mean reversion in any of these different areas within the market. So I'm using my screening process and my filtering to kind of surface those opportunities for me. And then I also love trading bonds. And I think that was from just working on that fixed income trading desk. I love trading treasuries. So yeah, movements in the yield curve, I'll capture those by trading TLT, which is the long-term treasury ETF. So yeah, my strategy, it's really a go anywhere strategy. Sometimes I'm looking at just US growth stocks. Sometimes I'll be trading bonds. It really just depends. And
So will you go where the opportunity is and where you see we are identifying opportunity, but also volatility as well?
yeah, so I'm looking at what is in play. A lot of times I'm looking for things that are emerging out of long bases.
Okay.
So like for example, China stocks, they've, performed really poorly over the last 4 years. Now, if you look at say like the K-Web ETF, it's been basing for almost a year now. And now we have China that's starting to do stimulus. So as I look at that chart, I go, hey, it's no longer going down anymore. Now it's going sideways. So now I start looking, hey, could it perhaps inflect higher? And that's usually where I'm trying to catch these things. I'm trying to catch trends pretty early as they're emerging from these big bases. And I like doing that. I know there's some traders that they'll catch things that have already emerged from the base. It's already up, 300%. They're going for that. I don't trade those as much.
You find the risk to reward isn't as prominent there?
Yeah, I find those can be great trades as well, but it's really just personality type.
Yeah.
Yeah, and I tend to think about things like longer term, a little bit slower.
Yeah.
When things are moving very fast, the move's already on. Those I'm less likely to go into, but they can be good trades as well.
There's pros and cons to it, isn't it? So like the pros being that you already know the market's moving, and the volatility's there and there's a lot of momentum.
Yeah.
But then the pros of your method is that you're in early, right? You're in from the start and you're maximizing that move entirely. But one question off that. So in the long base is essentially in a range, after a huge sort of down move, you're in a range for a long period of time. What is it that you're looking for technically to enter that trade? So you got the fundamentals there that might be, positive and showing signs of, okay, could be a good opportunity. But what technically will then allow you to enter that market after that range? So what are you looking for the markets to show you, in that range or breaking out of that range? What is it that you're looking for?
Yeah, so I'll even go through how it's evolved over time. When I first started, I would be finding these things and I go, it's going down, but I think it should be going up. So I'm just going to buy. And a lot of times I would be catching the falling knife and the downtrend would continue. And then boom, then you're in a losing trade.
Mm-hmm.
Now what I try to do for trend reversals is the stock is in a downtrend and I wait for it to get into that sideways base. And then what I'm doing is I'm waiting for the moving averages rather than them, falling straight down the screen. I'm waiting for those moving averages to start coiling and I'm waiting for them to just be moving sideways. Then what I'm also looking for is there a tradable low in the stock where I can put my stop loss below that low? So, hey, if the base is, let's say, like 5% from bottom to top, if the stock is trading towards the upper end of that base, I can put the trade on and maybe I have a 6% stop on the trade. So I'm looking for some way to manage my risk. And then I'm looking for some sort of catalyst or big volume coming out of that base. So from there, it's like you could screen for things that have been in a base for a long time. Maybe there's some news going on in the background, like with China. There's a lot of stimulus that's going out in China. So you have that in the back of your mind, and then you wait for the technical confirmation. So maybe you set an alert. If this thing is moving up on high relative volume, there's my entry. And then there's your trade. You've basically mapped everything out. You're looking for specific things and you enter when the timing is right.
So in that example then, let's say you got that 6% stop loss. Going back to what we talked about earlier about cutting those losers early. For example, you're in this trade and, a couple of weeks have gone by and you've noticed that if you've held a trade over, let's say 2 weeks, that it's more than likely going to go to stop loss. Is that where, let's say it's at just -2% in drawdown towards that stop loss, is that where you would then say, okay, let me cut this trade because I'm holding it too long, still in drawdown, and it's getting to the point where if I hold it longer, it's more than likely just going to go to the full stop loss, so I may as well cut it now? Is that the thought process?
Yeah, so that's a really good point. So I'll have my stop mapped out ahead of time. Maybe my stop is 6%. But if it goes down, let's say 3%, and then it's just kind of hanging around there, that's where it's like, oh, this trade's getting a little annoying. So if I see other things that are on the move, and it's like clearly this isn't in play, but there are other things that are, that's where even before my stop is hit, I might take the trade off, or maybe I'll take some size out of it. And so it's kind of like you have your 6% stop, that's going to protect you, but then you're getting out even before that stop was hit. So that's like as you're just iterating and getting even cleaner with your risk management, that's where you start to incorporate things like that.
And what about dynamic risk? So you talked about as well, one of the beneficial things for this year and something you focused on is sizing into your winning trades more, right? So what does that look like? So I'm guessing we just discussed how you would enter after these ranges. So how are you going about then and deciding on where to enter more size and also to add to those winners?
Yeah. So for example, last year I was trading Alibaba and it was a similar situation that we were just describing. I entered common stock and call options on Alibaba. And what I noticed that within this base, this sideways range, it started to make higher lows and equivalent highs. So it started forming like a structure within the structure. As the trade started to go in my favor, I started to actually add to the position. And it was maybe like I added some size on week 1, then maybe 10 days later, I added a little bit more size as it was kind of moving through that structure. Added a little bit more size, it was moving further up. And it's a lot easier to add when you have a little bit of a profit cushion. And then from there, the stock ended up exploding out of the range. And that's where it's like, okay, I've just harnessed a big winner. And so that's kind of how it works. You want to be adding, not when the stock is like so extended, but as the trade is starting to work and maybe it hasn't exploded yet, but you're getting the traction. That's usually a good spot to add. And then the other good spot to add is if the stock works for you and it's a longer term trade and then it forms another base. That's a really good spot where you can.
So essentially like volatility and a move, another range, another base, and then you're essentially just following the same playbook, but you're already in this trade, so you're just adding to it, following that same playbook. Yeah. You mentioned playbooks earlier, actually, in terms of playbooks. Like how have you gone about developing your playbooks? How many different playbooks do you usually have? And I would say more importantly, how often do you have to tweak? How often do you have to sort of remove and sort of, essentially kind of like an equity, take one out, add in a new one that's performing better? Like, what does that process look like for you?
Yeah. So one more thing on that example we just went through.
Yeah.
That example where you can add to your trade, that is not happening every day. That's happening maybe once or twice a year.
Okay.
Where you can catch a really nice trade like that and you can add to it. So I don't want anyone watching to think like that should be happening every day.
Every trade.
Yeah, that's like your home run that maybe you get once or twice in a year.
Yeah.
But yeah, in terms of playbooks, right now I have about, I think it's like 11 plays in my playbook. So I have my trading plan completely written out. It's in a Word document. And for me, it's really at the end of the year. That's when it's like, let me look through what I did, which setups and which playbooks was I taking the most, which ones were effective, which ones were not effective. And that's where I really think about like, is there anything else I can add into my trading that might make it better? So a setup that I'm actually looking to do a little bit more of in this new year is trading these news-driven episodic pivots. Where like, for example, that Western Alliance trade I did in 2023, there's a news catalyst pushing the stock. Those I'm looking to do a lot more of. So yeah, it's really just, you have to know what your setups are because then it makes your screening process easier. If you never define your setups, then you're kind of like, well, how do I set up screens? Like, I don't know what I'm looking for. Once you find them, and they're all over online, people have shared this stuff. Like there's a lot of good setups that are for free online you can find. Yeah, just write them down and then start screening for those. And they'll start coming to you. And then it makes it easier with over trading too, because when your setups are not appearing, then you go, okay, I guess there's nothing there for me today.
And what about when a playbook is diminishing and you're seeing that it's not really presenting itself? What does that process look like for you in terms of whether it's benching that and then introducing maybe something that's happening now? That's something, as you mentioned earlier, that's something that is in play, essentially. So let's say one of your playbooks isn't in play, hasn't really indicated or shown itself for a period of time. And therefore you recognize, okay, let me bench this, but something else is in play that might not be a playbook yet. What does that process look like for you in terms of being able to adapt to the market conditions and what the market's presenting?
Yeah, so good example of that in 2024. One of my strategies is a mean reversion strategy, where if a stock is extended a certain level from the 50-day simple moving average, stocks tend to mean revert. So you might be able to short that stock when it's very extended. In 2024, there was incredible momentum in the market. So a lot of stocks were going even further beyond that extension, beyond it. So for 2024, those were a lot of the trades I was stopping out of. So now in 2025, as I reevaluate, what's important to do is, just because the setup didn't work, that doesn't necessarily mean it's a bad setup either. So it is very important to be objective. Like, did I execute this properly? And 9 times out of 10 for me, it's me not executing properly. It's not the setup itself. And then from there, it's, hey, maybe let me adjust the setup a little bit. So for me, if I was shorting maybe at like 10 ATRs away from that 50-day simple moving average, for me, I changed that, and I'm going to enter that trade at 11 or 12 ATRs above. And then if something isn't working, perhaps you can just size it a little bit smaller. That's another thing to go with. But I find 9 times out of 10, it's the execution. It's not really like the setups themselves.
That's fair enough. That is fair enough. And one thing you said here, because you mentioned about the bond market, is that big institutional moves often start in the bond and FX markets. Understanding these markets gives you a significant edge as a trader. Could we just break that down?
Yeah. Yeah. So, for example, if you're a technical trader of equities, really what you're looking for is, hey, before the stock explodes to the upside, it typically has these behaviors. Maybe it's like it's making higher lows, the stock's in an uptrend, it's above the moving averages, that sort of stuff. Good earnings report. So really what you're looking at for all forms of trading is these few things tend to happen, and then the breakout happens. What I have found is with the equity market, there's usually a few things that tend to happen in the FX and bond market before big moves happen in the equity market. Like, for example, right now, bond yields are moving higher in the United States, and it's become a little bit problematic. Like, mortgage rates are higher, credit cards are higher, like all that stuff. It's a struggle. There are certain thresholds that if I see bond yields moving even higher, that's actually an indication that, hey, if I'm seeing bond yields moving higher, and then I'm also starting to see the stock market looks a little bit wobbly, I really want to be very conservative there. So it's really just like secondary indicators, getting a little bit more insight, and just using those to guide you.
Definitely. I think a lot of people what a lot of people end up doing is they focus purely on identifying as one particular type of trader. So, I'm just an FX trader. So therefore they start ignoring anything that's going on in options or futures or stocks, or the bond market. They just only focus on that. And though people can be profitable doing that potentially, I do feel like it can aid your trading and your understanding and your awareness by having that knowledge, especially if you know there's correlation there. What's the harm it will do for you having that knowledge, right? But one thing that I've noticed about yourself is that you rely on trend models, right, to score the market conditions. Can we touch on that a bit? So I think you have a -3 to +3 guide for your trading, right?
So that's something I developed when I was proprietary trading. And one of my big weaknesses when I first started was I would catch myself on the wrong side of the market. Like, the market was in an uptrend, stocks are doing great, and I'm over here shorting the market. And so I'm losing money, that sort of thing. So with the trend model, really what I'm doing is I have a few indicators that I'm looking at, pretty simple stuff. And essentially what it's doing is when the market is going up, my trend model is going to be at a +3. And I have rules that I have written down that I share these in with my subscribers in Discord every time the trend model flips. I have behaviors that I can do when it's at a +3, and I have behaviors that I can't do when it's at a +3. So essentially what I'm doing is, let's say if I have 11 plays in my playbook, when the trend model is at a +3, there might be 2 or 3 that I cannot do.
Interesting. Yeah.
So for example, one of my rules is when my trend model flips to a +3, I'm not allowed to enter new shorts on that day. Same thing if my trend model flips from a +3 to a +1, I can't enter new longs on that day. So really all it's doing is it's giving me some guidelines where, hey, let's say I get the market direction wrong. I'm not going to stay wrong for a long period of time. So it's very, very helpful because, yeah, if you get on the wrong side of a big market and you stay there, that's where, then your year isn't so good. But it just allows me to be a little bit more objective and, let the market tell me what to do.
What did the development of that process look like for you? Because it seems that you've expanded your playbook. Well, first of all, obviously we established that you've expanded from fundamentals to include technicals and use the combination. Then, of course, you've expanded the playbook, right? You probably started with 1 or a very small handful, expanded it out to 11 now. But then also now expanding into the rules, right? And grading the market, which then, based on the grade, which I found fascinating and I think is very, very helpful and makes complete sense, is depending on the grade, then you have certain rule sets to follow, things that you can and can't do. So what did that development look like for you? How did you start to notice that these things will be beneficial to your trading? And what did that progress look like? Like, you don't have to go too far in detail, like, we started with 1 and then 2
Yeah.
and so on. But like, what did that development process look like for you?
Yeah, so a lot of it was trial and error. So it was, I'm going to throw in one element, I'm going to try this. So for example, fundamentals. I realized, hey, there's a lot of limitations to what you can do with fundamentals. Same thing, when I tried only using technicals, I found, dang, there's a lot of limitations of only using technicals. Same thing with macro. I've tried so many of these strategies that then it became, how do I blend these together? So it's really like, what market regime am I in? What can I do in that market regime? Which things are signal, which are noise, and understanding all these limitations. So for me, the trend model specifically, when I went into proprietary trading, that was something my prop firm was very keen on, where, hey guys, you have to have a way for scoring the market. Everyone has their own methodology for doing so, but it's really going to help you. So that was how I developed that piece. And really, it's just been taking all these different things and combining them in a way that makes sense and in a way that they're additive.
Was there ever a part of your journey where you second guess yourself? You thought, maybe trading's not for me?
I never thought that. That was the crazy thing. So even when I had my worst performance and I was blowing up, I was like, I'm still one of the best in the world at this, because I had learned so much, and then you learn so much from the blowups too. I think the problem is when you blow up, then your capital's low, which is the huge, obviously that's horrible. But yeah, for me, it was, my confidence never wavered. And I think as a trader, the only way to make it through is if you really have the passion, and even in the face of setbacks, if you still feel like you can keep going. That's really the key determinant. So for me, even though I've had some good years now it's like, hey, I still want to keep going. So it's like, you can't get too overconfident and just think you're the best. But then, even in your down periods, you don't want to get too low on yourself either. You have to stay kind of like even.
Do you think it was helpful to be around a professional environment, and then in the both Vanguard and the prop trading world, but then being around and seeing other traders who were doing it? The reason I say that is because, as we talked about earlier, the retail traders who aren't in those environments don't really know any other traders. I've come across so many where they believe that trading's actually a lie. Like, this is just people online showing wins, but in reality, no one really wins, because they don't physically see people doing it, performing well, trading with good size. Do you think that was helpful at all, knowing that even in your down moments, it's possible? You actually do know it's possible, and therefore you backed yourself internally saying that I am one of the best, I can do this. But do you feel like if you didn't have that example, that direct example in front of you, maybe that wouldn't have been the case as much?
100%, because I went through a period of my journey where it was the same thing, where I was like, is there really anyone that trades profitably? And I went through the same exact experience. But yeah, if you find someone, it could just be one person that it's like, wow, this person is actually doing it at a high level. It doesn't have to be like triple digit returns or anything like that. But it's like, hey, this person was able to navigate the market, do pretty good. They're not in the 95% of traders that fail. If you just see one person, that can spark your confidence. So that's what's very important to me, like getting these verified results. Now people that join my community, they have more a belief in me and what I'm doing. So when I'm sharing information with them, they're more likely to believe, hey, if I do that, it could work for me too. And that's where you get the breakthroughs. Like for this year, there's a couple members of Pristine that they're also now competing in the US Investing Championship. So now we've got this hive of people that we've moved beyond the gimmicks of like, all right, guys, we're going to get rich quick in here. Like we've all moved beyond that. But it's like we want to actually succeed, whatever that might be for all of us. So yeah, it just takes like knowing one person to really like set your confidence off.
I think so. I think by having, it's almost like an example, because it's like if you grow up, let's say, in a low income household, right, that struggle, it's going to be hard for that person to believe that something's possible for them, like something more beyond what their environment shows them is possible, right? But then once they come into contact with or are able to observe someone who was in the exact same scenario, elevate themselves to something else, now they have an example, a case study essentially of, wait, they were in the exact same position and they changed their lives. They've elevated themselves to something more, bigger, something I didn't even see or think was possible because of my environment and my limiting beliefs and whatever it may be. And I think it's so true with trading, where a lot of people come into trading alone because they may have come across it online a lot of the time now. And then they start the journey still alone, and a lot of the time spend a lot of time alone still. And therefore it's so easy, as you say. Thankfully for me, it was the opposite, where I had a friend of mine who I'd known years previously. We didn't see each other for a while, came back into contact, and he had elevated his lifestyle. And so he was trading. So I asked him, like, what do you do? He said, I trade. I said, what is that? He broke it down for me. And then therefore I always had a use case of this person's trading. And he's not on social media or anything like that, so we knew it was just trading. So it was like I always had that use case from day one. So luckily for me, I didn't have that doubt. I doubted myself at one point. I doubted myself and my ability to trade, but never doubted that it was possible. So thankfully for me, but I understood when I'd come into contact with traders why they would say that, because they literally didn't know. All they had were references are online only, and a lot of the time the online people weren't necessarily verified traders. They were just social media traders. So it was easy to think, which could be possible as well, of course. Like they're not trading; they're making their money elsewhere. So it made complete sense. But I'm happy to hear that, getting into contact with, being around traders and being around, say, certain desks and knowing that it's possible is very helpful. And I think, what would you say, actually, to be fair, like to traders out there who may be in that position where they're not around any other traders? Like, what would you advise them to do? Because obviously, getting into the prop firm, the actual prop firms, that route isn't for everyone, right? I think it's beneficial for sure, but it's not for everyone. And not everyone might be able to get into that position. Same with Vanguard. Like they might not be able to get into a position where they're in this more professional environment. What would you say for traders out there, like the average retail trader? Like what could they do to sort of be around and soak up more knowledge from, verified traders and traders out there?
Yeah, I would say you have to follow your gut. Everyone is going to be different. Some people thrive if they're in a huge community. Other people really can do well just by learning on their own, picking some stuff up online, that sort of thing, doing formal education. So everyone is going to be a little bit different. But I would say if you're on your own and you're struggling, I would say find people to learn from that actually have, results that they can show you and results that you would want to get as well. Because I see it all the time where it'll be someone online that it's like a cartoon bear avatar, and like people are listening to this person. It's like they won't even tell you their name.
Yeah.
It's like if someone's not willing to tell you their name, how can you have faith in them or trust them? So you can learn from people, just be careful who you're learning from. And I think that's part of it as well. You have to be able to filter. So work on just filtering, maybe have some, just some verification that you do on people or whatever it might be. But there are some really good people out there that share their knowledge. A lot of people share their knowledge for free, podcasts, all that kind of stuff. So it is all available. One thing I would tell to anyone watching this is all of the trading wisdom has already been discovered. I don't really think there's anything new in trading. There's ways people can get faster, via coding, algorithms, that sort of stuff. But beyond getting speed advantages, it's all out there and you can find it all for free as well. So you have to be resourceful and just follow people that have some sort of verified record.
What are your thoughts in terms of one question I forgot to ask earlier, to be fair, was in timeframes? Like, obviously, because you're long-term trading, sort of more swing to position trading. What sort of timeframes when it comes to your technicals are you looking at?
Yeah, so for me, I'm looking at weekly charts, then I'm looking at daily charts. And then maybe for the execution side, I'll look at the hourly as well if I'm taking a trade. But for me, I'm looking at something and I'm like, what can I get into at the very start of the year that I think might double by the end of the year?
Interesting.
So typically I'm looking for about like a year out, something around there.
Wow.
But I really think it depends on your mind and the way your mind works. Like I think about things very deeply and I'm more of like a macro person. So I think for me, thinking that far into the future is kind of good. Whereas there might be someone else that they're very good at just thinking fast and they're more transactional, more execution based, and maybe a slower time frame works for them. But what I will say is the shorter your time frame is, the higher chance that your competition is a robot. And most likely you're not going to beat robots and algorithms because they don't make emotional mistakes. So if you're trying to like scalp like the 1 minute chart, you are literally competing with algos. And most likely, unless you're very good, the odds they're not there in your favor. One trend that tends to work for people is the market tends to go up over time. So if your time frame, say you're like a 5-year trader, if you buy almost any stock, 5 years from now, it's going to go up. But that trend dissipates when you get to those lower time frames.
Yeah, I do love that, especially with the lower time frame stuff is interesting because what I found actually, not even just when it comes to lower time frames, it's like lower time frames versus higher time frames. It's fundamentals versus technicals. It's the options versus futures or forex versus this. It's like there's always in the markets. I mean, people like yourself and other verified traders, they understand that anyone can trade any way, depending on their personality and so on, and on where they find their edge. But even then, it's more so in the verified traders than anyone, to be fair, is that they have very strong convictions in some of their beliefs, right? So equally, I've known like really successful scalpers who truly go like the best edge is in scalping, right? And there's truth to it, of course, but it's more so down to the fact that they found their edge in scalping, right? Versus there's like an incredible, return trader out there who only long term. Well, even yourself, right? At 255% in a year, long term, right? So anything can work, but it's interesting as you mentioned, like you understood yourself, you understood you're a deep thinker, and that you have sort of a longer perspective on the markets. Where did that understanding come in, or that insight, that internal insight? Was that something you knew early on, or was that something you kind of learned throughout the journey?
Yeah, so I think when I first started and I knew nothing, that was what I naturally gravitated towards. Where I wasn't trading every day, it was sporadically. And it was like, okay, I'm watching the market every day, but I'm maybe taking a trade like once every 2 weeks or something like that. And I did that without really having any training or anything. So that was where I naturally gravitated towards. So I definitely recommend for anyone, think about where you're naturally gravitating towards and where you're having the most success. I had a couple of years where I had major success doing that. And then when I tried day trading, I had no success in it. Whereas one of my best trading friends, he used to work as a floor trader in the pits in Chicago.
Oh, nice.
And he's a scalper. And I talked to him on the phone and he's so fast with what he's doing. And he's taught me a few things, but if I tried to do it the way he does it, like he would crush me. If I had to compete against him and what he's doing, like he's going to dominate me. So for that reason, it's like, I want to stick with what I'm good at.
Mm-hmm. That's a big part of the edge, right? I think a lot of times people will just assume edge means strategy, and that's it. When in reality, edge means strategy. It means your ticker selection. It means, what even the news catalysts, right? That's part of the edge. But also knowing what you're good at is part of the edge. Another part of the edge that a lot of people don't talk about is your routines, right? what is your routine for your trading? Like, how are you optimizing your day-to-day life to maximize your performance in trading? What does that look like for you?
Yeah, so for me, I have a pretty detailed pre-market routine. So I'm typically on the desk around 7 o'clock, and I read some news catalysts in the morning. I have a couple of news wires I look at, pretty much clean those. I clean Bloomberg, Wall Street Journal. And then from there, I'm looking at technicals and what's happened overnight. Then when the market opens, I'm really focused on the market for the first 30 minutes. And I want to see what's happening. If I have trades to make, usually I'm making them in that first 30 minutes. And then I'm putting some things out in my Discord. I'm chatting with people, that sort of thing, managing that. Between 11 and 2, that's really where I make more when I'm off the desk. Like, I'm actually a harm to myself during those hours. So I really try to stay off the desk and work on something else. Like, maybe I have indicators I'm working on, newsletter stuff, that sort of thing. I do other work. And then from 3 to 4, then I'm pretty engaged again. I'm on the desk looking at what's happening. And then every night I do my evening homework where I'm running all my models, doing my analysis, looking at all this stuff, and I package it together in a research note. I send to my subscribers. And then the whole wheel just turns over and over again. So yeah, and then during the weekend, I have a routine as well. I put all my research into a note. I send it to my subscribers. So yeah, for me, writing the newsletter has also been awesome because it really gets me to systematize what I'm doing, think about the why behind it, and there's accountability there.
Do you believe that to continue to perform at a very high level as a trader, that you will consistently have to put in that work, like consistently follow that routine? Because I believe that there's a lot of traders out there that believe one day when they're profitable, it becomes easy. It becomes like, you don't have to do as much work that it took to get profitable. And I think that, and I had that same mentality. I had that same, that thought process. And thankfully, through the podcast and even before the podcast, I'd learned differently the reality of trading. But what are your thoughts on that, though? Do you believe that for you to continuously perform the way you have, and if anything, to even increase, that level of work and detail that you're doing at the moment, that routine that you're rigorously following, even on the weekend, which is interesting as well, right? The market's closed. Why are you doing any work on the weekend? Is what some people may think. But do you think that is truly how you perform at your best and consistently perform at your best? As you mentioned earlier, right? Consistently profitable. You thought it meant day to day, money in the markets. I would say consistently profitable is very much what you said earlier, but also it means doing the work consistently. And consistency essentially in the definition means forever. Like, there isn't I think what people think is you get to a destination. It's like a destination. It's like, eventually you will be consistently profitable, but no, it's like you have to consistently be consistent,
Yeah, you have to keep earning it. So yeah, if those routines fall apart, then my trading results, they're going to suffer. So it depends on what strategy you run. Like my strategy, given that it's longer term, could I skip a day somewhere? Absolutely. I don't, because I write the newsletters. That really keeps me accountable. But to be honest, if my routine slipped, if I stopped putting the time into the market, like sometimes on the weekend, I'll be like, you know what, I want to research a company. It'll be a random company, and I'll dig in, maybe spend like 2 hours, reading up on it. Or during earnings season, I'll be listening to earnings calls, that sort of thing. And it's really like getting those hustle points in where maybe it amounts to a trade, maybe it doesn't, but you're putting that time in. So yeah, I think in trading, there's no point of arrival or like I just hit this level where now I can just generate this all the time. It is a grind. Like even if you work on an institutional trading desk, it's like this wheel that every trading session, there's certain things that happen at certain times and you got to keep going through that process. So yeah, if you want to really pursue a career in trading, you have to understand like you need these routines. And if you want to have a good 30-year track record, you're going to have to do these routines for the next 30 years. So most people don't want to do that. But for me, I love it so much that for me, it's all good.
How important do you think it is to be passionate about trading and to be a high performer?
It's the most important thing, because if you're not passionate, like we all have things in our life that we're not passionate about. And most of the time we're not good at them because we don't want to put the work into them. But if you have someone that's like fascinated with coding, for example, and they love it, they're going to be able to code some awesome screens, awesome filters, do automations, that sort of thing. Where if someone's just like I want to make money, but I don't really like this stuff. They're not going to put in that work. Or like if someone really loves technical analysis, they're going to go through all the charts. But yeah, passion is something that allows you to do so much more work than someone that doesn't have it. So I think it's crucial. You need it.
In terms of trading psychology, one thing that was very interesting and sort of really shaped my mindset going through the podcast is I was of the same mindset that I think majority of traders out there have, which is trading psychology is so important, and that's the biggest thing that holds traders back. And then since doing the podcast, but also because of the podcast, I watch a lot of content. I'm really listening to a lot of verified traders, professional traders. They talk about how trading psychology isn't as big of a problem that traders assume, right? Some people say trading psychology is bullshit, right? That's just the term they use. But what they're saying is, they're not saying it's not important and it's not a real thing. What they're saying is, though, that the biggest issue that would actually solve the psychological problem to a degree is actually having edge. The fact is that most traders don't have edge. They don't put in the work to find edge in the first place. And therefore, they use psychology as an excuse for why they don't have edge. But they don't see it that way. They just see it as FOMO and greed and I oversize and whatever it may be because of my psychology. But in reality, they don't have a well-defined system. They don't have a system. They just have maybe there's this particular technical pattern and, or this particular volatility, whatever it may be. Like, what are your thoughts in terms of trading psychology?
I think trading psychology is very important because if your psychology is not right, then your execution is not going to be there. If you're a systematized trader and you have an algorithm that's doing the executions for you, then yeah, trading psychology does not matter. But for example, if you don't have the confidence that your trading strategy works, then when it comes time to execute that trade in real time, like say you're trading a breaking news catalyst, if that news catalyst comes out at 10:01 and you see that thing come out and you're like, okay, this is bullish, you have to make that connection. And sometimes within 30 seconds, I'm in a trade. If you're like trading very poorly and your psychology's not there and you're like, man, am I just going to take another loss? Like, I'm so over this. You're going to hesitate and then the thing moves without you. So to me, it's really like you need to have confidence to execute. And I think, of course, like if you're executing very well, the confidence kind of like hand in hand. But I also think where psychology comes into play is if you're desperate to make money, like if you're operating in the market from a poor person's mindset, then you're going to be looking for trades everywhere because you're desperate to make a buck. Whereas if you're operating from a mentality of abundance, like I can do this, I know things are going to go well for me, I know by the end of this year I'll have some good results, then you're not there looking for everything. So yeah, I think it matters. There's lots of different ways to look at it, but for me, psychology has been pretty important.
No, definitely. It's like I said, though, it's not in terms of like they say is non-existent or anything. It's more so, as you said about confidence, right? And execution. It's like if you don't have an edge or a data-backed edge, essentially, how will you be? How can you expect yourself to be confident? Don't get me wrong. There's definitely, I'm sure, circumstances where you've actually got the edge, but still your confidence isn't there.
Yeah.
And then that's, of course, psychology. But I think a lot of people don't get to that point. A lot of people, unfortunately, they don't have the edge, and then they're not confident, of course, but they blame then the psychology versus actually, wait, I haven't done the work.
Oh yeah.
So like in terms of like building an edge for yourself, like what did that look like in terms of data? Like how much data were you collecting?
Yeah.
In order to say, okay, this is actually a playbook. This is a playbook I'm gonna class as a playbook and use, day to day and throughout the year for my trading. What did that look like for you? What was that process of collecting your playbooks and your edges?
Yeah. So I'll start with when you really have no edge, it's really you're showing up to the market. Maybe you have a charting platform. You're seeing stuff going up and down, and you're executing trades based off like, okay, this is going up, this is going down. I got a feeling. That's like square one. But really, when you start to develop edge, to me, it was a multi-year process. So like when I was studying economics as a freshman in college, I didn't even realize it, but maybe I was developing edge there because now I use macro in my approach. Same thing when I was studying the CFA exams. I was 21 years old when I started that. I was learning fundamentals. I guess I was developing my edge there over those couple of years I was doing that. And when I was working with Y charts, I was doing a lot of data science work, which now helps me with my trading. So I guess I was working on my edge there. I was doing prop trading. I was learning options and technical analysis. So I guess I was working on my edge there. So it's something that it takes years and years to refine, and it just takes consistent work. So it's like, if you don't know anything about data analysis, maybe you can rely a little bit more on software tools to help you with that. Same thing, if you don't really know fundamental analysis that well, maybe you can do the same. But you have to have something that's unique, because the reality is 95% of people fail. So it's like, how do you end up in that 5%? You have to be a little bit different, and you have to put in some sort of effort, adhere to your system. So for me, I'm still refining everything I'm working on. Like, even after this year, I was like, oh my gosh, I'm making all these mistakes. I can optimize this. So I started rewriting my trading plan after this year. So it's kind of like, the farther along in the journey you go, it's like you still have this beginner's mindset of like, oh man, I can keep going. So yeah, for people that don't have anything, they don't have models, they don't have technicals, they don't like, it's just, you're never going to stand a chance. So you have to develop something.
How often are you reviewing? Like, what's the periodically? How often are you reviewing your trades
Yeah, what I have found,
or your performance? Sorry.
yeah, what I have found is reviewing a little bit less is actually beneficial to me. I went through a period where I was pretty much reviewing my trades every single day, and I was kind of grading myself and all that. But what I found was I was always just thinking about what I'm not good at. And it was just like, oh yeah, I did this wrong, I did that wrong. Or like, you start to think, if I had just done this, and that, I could have completely optimized the day. And you start to think that you have the ability to catch everything.
Yeah,
So
that's fair. Yeah, that's fair.
Yeah, so what I found is every one of my trades, I write it up and I send an alert in my Discord server. So in that way, I'm kind of like journaling the trade by writing it out and writing the idea. And then every night for my newsletter, I'm reviewing my position log. So I'm pretty much reviewing my stuff every day. In terms of loading it up into a journal, that's primarily for me like an end of year thing.
Okay.
That's something I would actually like to update to maybe like a quarterly thing. But I found even doing this year-end review, it's like, I want to look at what I've been doing wrong. I want to learn from that. But then now I want to think ahead. Because if I'm always thinking about like, I did this in the past, that's not good, it's going to affect me. Now it's like, I need to focus on the road ahead. So I think for everyone, it's a little different in how often they review their results and all that stuff.
Yeah, that's interesting. So like at the end of so as you said though, like at the end of this year, you've noticed some mistakes that were made last year. Were there also like things that you thought, oh, this worked really, really well this last year, and that you want to optimize on and optimize further to sort of, maximize the growth you can have from that as well?
Yeah. So a lot of what I'm working on for this year is getting faster. So right now I'm coding these indicators in TradingView. And then what I want to be able to do is screen based off of my indicators.
Okay.
So now it's like I have these 11 setups in my playbook, all written down, further crystallize those, and be able to screen for each thing in the playbook. So in doing that, it's really like becoming more efficient, maybe saving some time too on the routine, and just kind of refining things. And yeah, so it becomes more like refinement, getting faster. And that's something where if you're like day one on trading, you're not really going to be thinking about that stuff.
Yeah.
But as you get further along in the journey, it becomes more optimization.
Has the election, like with Donald Trump obviously becoming president again, I was about to say prime minister, the president again, does that have any sort of influence on or any changes that you're going to make this year at all? Or is it just something to sort of be aware of?
Oh, it does. So I remember trading through the last Trump administration, and it was very news driven. So it was wild. Like as a president, he really cared about the stock market, wanting it to go up. On days when the stock market went down, he would literally tweet things to get the stock market to go up. So if you were not glued into Twitter, you might, let's say you're pure technical, you're entering the trade, it looks great, you're short. All of a sudden you might be looking at your chart and you're like, what the heck? Like, all of a sudden there's a spike up. So for me, what I love is I love trading news. So for me, I think with this new administration, it could very easily turn into more of like a macro driven environment, a news driven environment, and more volatility, less like just straight up trending market, which I think is good. So it's kind of like time to dust off the news trading. Need to get my news wire there, really focus on that. So it definitely does change things a little bit.
Yeah, I love that. I was Funny enough, I actually landed in New York the day you won that first election.
Oh yeah.
Yeah, it was crazy. It was crazy. I remember I was on the plane when it got announced, and then by the time I landed, there was already protests
Oh.
in New York. Yeah, which is always fascinating. But yeah, no, like you said, though, it was an incredible 4 years. And I actually remember, now that you say it, I didn't correlate the two at the time of like when the stock market was down, he would tweet. I just thought there were tweets, random tweets, but he would do that consistently. And you'd see those markets. I was primarily on the FX side and gold, and you'd see it there even, let alone the stock market. I can only imagine in terms of equities and the stock market. But two things before we wrap up. One, obviously, Pristine Capital. What's your goal with that? Where do you want to take that? What is your vision with that?
Yeah, so originally it was me productizing my research, putting it together. I was already doing this work anyway, so it was really sending it out. Then we added in the Discord server where I'm actually interacting with these traders on a day-to-day basis. Over the last 2 years, we've built up this really awesome culture. Whereas I'm going into this contest this year, there's a bunch of us in there where we're all very aligned. And so we're all kind of finding things and surfacing them. So for me, my goal is really my Substack and Discord and operating that's like my day job. That's like my 9 to 5. And I want to add as much value to people as possible. Because in the past, sometimes I've kind of thought about it as like, I need to kind of like hide what I'm doing, or if I share what I'm doing, then the edge is going to erode. And my mindset on that has changed a bit, where it's like all this information is already out there. I want to actually share stuff with people that's going to help them along this journey. So it's kind of like if I'm doing well in my own trading and there's people in our group that are also making breakthroughs, that's fantastic. So yeah, for me, it's trying to grow that and then trying to keep going on the trading too.
Would you say those, well, because as you said, you've got a few traders in there who are entering these championships and performing well as well. Would you say, though, that is there any sort of vision of, okay, once you have a good collection and a good portfolio of results, that you could raise capital and sort of manage capital together at all?
That's something I've considered very much in the past, like starting some sort of fund. And so for me, I want to have the options. Like I want to keep building, because if you keep performing well and you stay disciplined in this craft, good things happen to you. So it's really like, as long as I can keep doing that, keep giving people value. The other thing is like, I'm not charging people a crazy amount. I want it to be really accessible for people too. So as long as I adhere to that, I'm doing my best, sharing the ups and downs with people, like that'll make me happy. Like if I see someone crush it in the USIC, that'll make me so happy. So yeah, if all that stuff happens, then good things will come about.
Definitely. I love that. And just one tweet I took from 11th of October here, where you said the difference between a casual punter and a professional trader, it's all in how you handle your losing trades. Right? Can we expand on that just a little bit?
Yeah. So in a bull market, everyone has good trades. And what I've noticed in a bull market, people that are the casual punters that are just doing that, they have no systems in place. They just open up the platform and are executing trades. A lot of times they can actually outperform seasoned professionals, because when everything is going up, it's really like who levered up the most and who did that sort of thing. But it's really when things go wrong and you take your A+ setup, it hit every one of your criteria, you sized in, and then the trade goes south on you. That is what determines if you make it or if you don't make it. So that is the most important thing. If someone controls their losers, they'll have longevity. If they don't control the losers, they're going to blow up.
I love that. Andrew, I've really enjoyed this podcast episode for sure. I've learned a lot. I know the audience have learned a lot. And links for Andrew will be in the description below. Like today with Andrew, we've learned so much in terms of playbooks, in terms of dynamic risks, in terms of being more intricate and thinking about what you're good at yourself and how that reflects in your trading to then focus on that more. We've learned so much. Drop a comment of your biggest takeaway from this episode. There are other episodes and past episodes on screen, so make sure you check those out. And until next time, everyone, take care.